day, London session. So we have, oops. We have AUD NZD.
What is that Kiwi dollar?
Yes, Kiwi dollar. It's the Aussie Kiwi.
Aussie Kiwi.
Yeah, that's the Aussie Kiwi. We're gonna look at Euro GBP as well. I think we need to visit the equities markets because yesterday someone had asked about Nasdaq. I think it's only fair that we revisit that.
Kutala.
Yes, Kutala had requested Nasdaq. I had a setup on German 30. Oh, price is still far from it. Let me not waste your time. UK 100 also playing too far. I think let's also look at gold. A lot of people are confused with gold. I've been talking about it for some time on these sessions. We're still waiting for the market to come to at least 2,330. That's the most valuable demand level that's there. No guesswork. We don't do guesswork. Let me see if I can balance things with a stock. I was looking at Facebook and Tesla the other day. I think we can look at Facebook. Let me see my stock on the left-hand side. Oh, and the local one, the dollar against the South African rand. Yeah, I think that will be okay. Yeah, that's it for today. And if you have a personal pair that you'd like us to look at, please do so in the comment section. Let us begin our session with the normal operating procedure. We have to go through a code. I didn't know that this was beneficial for some people going through the codes. I've been getting some testimonials of some sort, people saying this is really beneficial to them as far as motivation is concerned. All right, so today's code is predefine your risk, calculate the percentage or the dollar value. Most importantly, accept the risk. Risk is the name of the game. It takes money to make money. You cannot avoid risk. However, we have some strategies to mitigate it. So what are the steps? Identify the risk or where the market has a potential of going against you or where your stop loss is supposed to be in literal terms, right? Calculate the percentage of your account. How much will that be should the market go to that level? How much do you stand to lose? Yeah. And the value, the dollar value, so that you can take the trade and go about your day, do your daily errands without being worried. Why? Because you know exactly how much you stand to lose should the market get there, and exactly how much you stand to make should the market go to your target. The most important part that I think has been a problem rather with a lot of traders that I'm coaching is accepting the risk. I see a lot of people do not accept the risk. You find that someone would put a stop loss. He or she has no idea how much they stand to lose at that level. Hence, once the market starts approaching it, they start moving the stop loss. Critical error. They start moving the stop loss. And when it happens that the market triggers their stop loss, and then people are angry, throwing laptops against the wall, stepping on their phones, cursing, and all of that. And I realized that the problem here is people do not accept the risk that if the market gets to that level, I stand to lose $25, and you have to be okay with it. For you to make money, I'm telling you, there could be $1 million opportunity in front of you. But if you're not willing to risk that 100K for that million, you'll never make money. So you have to accept that this money may not come back. That is part of trading. That is how you make money in trading. There's a series that's coming where I'll be interviewing trading legends from all over the world. Shout out to you guys who have watched the podcast, by the way. I hope you guys have enjoyed it. It's called Trading Legends.
I didn't get the broadcast.
Oh, sorry about that, Uncle. Will you get it? It's the link is on the Telegram group. I'll send it to you privately. No worries.
All right.
Yeah.
I thank you. Thank you, man.
You're welcome, sir. So I'll be interviewing great traders from all over the world. One of them is right here in South Africa, one of my favorite traders. His name is Clover Scam. He is a CMT, a chartered market technician in the market. He's been in the markets for close to 20 years now. What is common when I speak to these guys who've been trading for so long is detach from the money. But it's hard to detach from the money when the same money you have on your account is the same money that's supposed to produce rent, groceries, pocket money for your kids. So it is really hard when that is the case. So what do you do in such an instant? Find a way not to need the money that's in the account. If it means selling cookies, if it means reselling hardware material, go get maybe a hammer at a local warehouse at 50 Rand and sell it for 150. Do that so that you do not put pressure on your account. And so that you do not, I always say it, so that you do not get involved in stupid trades. What are stupid trades? These are the trades that you didn't plan for. These are the trades that you took from that guy on social media. You think he makes money every day. So find a way not to need the money so that you wait for that opportune moment. It is very important, ladies and gentlemen. All right. Now let us get into trading economics. Of course, we just want to see what is happening today. Apparently, European markets are lower. We'll see. I think we have a euro. I didn't add that. I think we have a euro NZD or euro AUD on our watch list. We will see how that markets behave. So major bourses in Europe were in the red Thursday with the STO double X50, which is the European stocks, falling 0.7%, tracking losses in other regions as the market failed to sustain a comeback from recent sell-off. Investors also digest earnings reports from major European countries. India leaves rates steady as expected. If you've been following these sessions, you realize that a lot of economies are leaving their interest rate at the same level. To me, that is indecision. How do you translate that to a chart? Is a dodgy candlestick because they are not sure of how to react to the current, should I say, flash crash. Reserve Bank of Australia not hesitant to leave borrowing costs again. It's the same thing. Interest rates kept the same. Indonesia consumer mood edges up. Philippines second quarter domestic product growth accelerate to 6.3%. That is very, very good. Unfortunately, I do not trade the Philippines currency. Japanese shares track Wall Street lower. So Japanese markets has been responding to the downfall of, should I say, the flash crash of US equities markets. UK housing price balance hits 7-month low. It'll be interesting to see how the pound reacts to this, especially with the current riots that are going on immigrations and stuff like that. So Forex Factory calendar, let us see what is due to come out today. We're looking at the red folders mostly because those are the high impact news. Reserve Bank of Australia Governor Bullock spoke earlier this morning. So that is where the news event came out that they are just going to keep their rate at the same level. Inflation expectation from New Zealand dropped by 0.30%. What's due to come now is going to affect the US on unemployment claims. So the previous value was 249, and the next one is expected to be at 241 to drop. meaning less people are going to claim for unemployment. What does that mean? More people are getting employed, more taxes for the government, and improvement in the economy or the US dollar, so to speak. So yeah, let us jump onto our watch list today. We're going to start with the dollar index, of course. It still hasn't moved much. And I have had some people coming to my private WhatsApp saying, you still haven't traded since the dollar against the US dollar has just been playing at fair value or consolidating. Yes, I haven't. You have to be that patient. I worked hard for my money. I can't just lose it anyhow. Right. Let us look
You work
at
hard for the money. You work hard for the money.
exactly.
Love that song, eh?
Yeah. I can't just risk my money anyhow. Work hard for it. So with gold, let me remove this before people think that's the only the sell option is the only thing we're waiting for. You see, with the kind of method that I'm teaching you, ladies and gentlemen, you kind of wait for the market on either side. You can either be a buyer or be a seller. So you become neutral. How does that help you as a trader? It eliminates bias because once you are biased in the sense that, for instance, you believe Trump is going to win these elections and there's nothing wrong with believing that. Trump is going to win the elections and the market is going to go a certain way. The problem with that, or the challenge with that is, should maybe you're expecting the market to go bullish when Trump wins the elections. And then the market does not do that and goes bearish. You will be blinded to seeing the selling opportunities because now you're biased. Hence, we also say, leave your problems at the door. Yesterday's quote was, trade the markets, not your problems. Because once you think about your problems, then you're going to see opportunities even where they do not exist. And that's how you lose your money. I am always going, I know a lot of people have left these sessions because they hate my emphasis on risk management. I do not want to mislead anyone. Risk management is the one thing that is going to make you profitable in this industry at the end of the day. And I don't want to be like everyone who's misleading. Kutela said, let's look at NZD USD and GBP AUD for sure. We're going to go through those as well. Let us look at the AUD NZD. We had it yesterday, so I won't analyze. It's just a review, ladies and gentlemen, because we need to also go back to what we were doing yesterday to see if we're making progress, to see if our analysis is playing accordingly. You see, now the buyers are starting to come in. Now the buyers are starting to come in towards our level that we had. I don't like using the word predict, but let me say analyzed, right? Towards the level that we analyzed. So at 101.09, 700 is our supply level with AUD NZD. Please go onto your charts and try to draw something like this, but you can also put some right up. Why? Also ask yourself, why did Maxwell pick this level? If you do not understand, also ask me privately, or you can ask in this session, why did I pick this level? That is how you improve, ladies and gentlemen. I always open up the floor for questions because I believe you learn through asking the right questions. Hence, one of the questions.
Is that an order block or what?
Yes, you can call it an order block, but it is a supply level, the highest supply level, because we have another supply level here. Why did I pick that one up there? I made this question yesterday, or I posted this question to you guys yesterday, to say, let's imagine you bought this car at 18,000 with the purpose of reselling, right? And then there are two people, yeah? One of them is offering at 22,000, one of them is offering at 25,000. Your purpose here is just to get money out of the car, to get profit out of the car. Would you sell it at 22,000 or would you sell it at 25? Obviously at 25, because there's a better profit margin from there, right? Now that's general business. Also, if let us imagine we're aiming for the same levels, okay? speaking of profit margin, better profit margin. So if you put your stop loss right there, target the same place down here, you see that you get a better profit margin by going for the extreme zone than going for the nearest one. This one gives you a risk reward ratio of 3.7, meaning if you risk 1%, you can walk away with 3.7, but here you can walk away with 10.7. Logic, ladies and gentlemen. Sometimes you just have to apply logic. It is sometimes it surprises me when I hear these people getting scammed by these people. I'm sorry to say, but it's true, who know nothing about the market, business experience, and life experience. And they're just talking. There's also this tendency of people going on to podcasts and talking buzzwords that have no substance behind them. I've heard people saying proper risk management. And I kept asking, what is proper risk management? And they asked me back, you don't know what's proper risk management? I'm asking you, you're supposed to give me a simple answer like it's subjective, but here's what my recommendation is. We need to be careful. And some of us are very, very old, ladies and gentlemen. I'm not that old. I just entered the 30 level.
Hopefully, you are not older than me.
I beg to differ. I think you're older than me, but we have to bring this experience. I mean, so much of these things have happened in the past. The reason we go through certain things in our lives is so that when we encounter the same problem in the future, we deal with it better, right?
Actually, can you just up your volume? Can you just up your volume there? I can't.
All right.
Yes, okay.
All right. Sorry.
Hey,
All right.
better then.
Fantastic, fantastic. So I was saying the reason we go through things in life is so that we deal with them better in the future when we encounter similar, with a slight variation, similar problems. We need to deal with them better. So, I mean, so many people have been scammed, and I don't want to sound rude. Some of these people do not have metric. They've never been disciplined to anything. To focus on a 4-year degree and struggle. And this person has been trading for 3 months. We do not know that. And my mentor said something yesterday. I had a call with him. He said, if you are enjoying trading, you're probably not making money. And then look at how these people are portraying trading. They're like, it's all sunshine and rainbows, payday every day, blues every day. It is not true, ladies and gentlemen. I'm going to be the one to tell you 9+ years experience as a trader, as a coach, and as a business developer. I've also seen the data behind the scenes. I've seen people lose accounts and then go on Instagram and post profits. And you just wonder, where did these profits come from then? It is not real, right? So speaking of experience, Kutala says, in your experience, Max, does price always go back to the zone, to the zones? Then it's a matter of them being respected or not. In my experience, they always go to a particular zone. So sometimes it's an issue of, did you pick the right zone? Or how I like to explain it, there might have been a big buyer or a big seller at this point that pushed price further down. So it's not your fault. However, what do I do in that instance? Do I join the trade here due to fear of missing out? No, I always wait for what I planned. You see, ladies and gentlemen, if you could stick to the plan, let me ask you a question. How far would you be in life if you stick to the plan you had 10 years ago? Very far. But along the way, we get distracted. So you need to be able to spot the traps in life and in the markets. So there are also traps in this market. So you need to be able to spot them and avoid them. I hope that made sense. Let us look at the next pair. That would be Euro GBP. Euro GBP just got activated. I just got my sell limit activated. Euro GBP. Some old analysis. So let us do a top-down analysis. Let me not cheat this one so that you guys understand how did I get to that conclusion, right?
I just love that word. If you say, let me not cheat, which means you are starting from the fresh.
Yes, it's very important. It's very important for me to follow the process.
I like clear charts, clear charts.
Yes, sir. Yes, sir. Here we go, ladies and gentlemen. So we're bullish on a monthly. So for first things first, I am catching a reversal. So this Euro GBP trade of mine that just got activated today, I analyzed it. I think the first month of, I spotted the opportunity rather on the first month or first week rather of July. So currently we are bullish on a monthly, right? Bullish on a monthly, bullish on a weekly, bullish on a daily. How we are supposed to trade this, the original way, is to look for buying opportunities, okay? We are looking for buying opportunities because the market is pushing up. So then you ask yourself, where did this up push begin? That's where you want to enter. That's where the original demand level is. It began right here. And then I get the question, Maxwell, that is way too far from current market price. What do I do now? You wait. But if you're like me, who had anticipated a potential shorting position here based on this high, right? Higher high. I'm sorry, lower high, let lower low. So it's a sign that the market is going down. We're on a daily time frame. Kutala says, sorry to disturb, Max. How much time we have left? I think we have, let me see. I think probably around 40 minutes. Not for 20 minutes, sorry. We have around 20 minutes. I don't know whether you're asking whether to rejoin the trade or just general time.
Maxwell, what candle is that? What candle is that? Is it a bearish engulfing? What anticipates you that you should take that decision? What candle is that?
All right. Let me go here. Let me go back to the daily time frame. All right. So were you asking which one, the top one or this one?
The last one where you have said you possibly making your confluence from it then.
Yes. All right. So it's this one, the top one. So let's look at it.
Yeah, that one there. Can you enlarge it? Yes, can you enlarge it? Let me see what type of a candle it is.
It is
all right. There it is. Yes.
It is definitely an engulfing.
Bullish engulfing. Yes.
Yes.
Good.
Yes.
Yes. All right.
Yes.
Your confluence is from there.
Yes.
I see.
My confluence is from here. Let me explain it logically. Okay. So buyers were coming in, as you can see, coming in. I think these were retailers, and then a big buyer came in here, strong buyer, and another buyer came in here on a daily time frame. But if you look at this one compared to this one, this is loss of momentum, right? Meaning buyers are losing strength. And then what happened after this one? Boom, very strong drop with a lot of imbalance, engulfing candle. What does it engulf, or what does that mean? It means this whole bearish candle was able to swallow all of these buyers, and this
100%.
buying activity was erased by this down move.
100%.
So that is a sign that there are sellers there. So what I did was then go to a lower time frame, which is 1 hour, where I normally make my entries.
Maxwell, sorry to shunt you around.
No
Can
worries.
you come down again to drop here, this downward movement? Come here. I want to see this candle, which have actually changed now the flow of the market. The last one on your bullish move.
The previous time frame.
No. They were where we were now. Yeah, that one. Yes.
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 Absolutely.
Yes.
We can do this. Also,
come down.
Yeah.
Yes, that one. Yes, come down. Yes, down. That's right. enlarge it, make it bigger, then maximize. We
Okay.
just want to see that candle, which have actually decided that the market should go upward again. Let me just see.
This one
Uh,
or this one.
no. The one on the support. Yes, somewhere there. Yes. That one.
All right.
Uh,
So in this kind of state, it was hard to tell whether the market was going up or down. I mean, further up. Why? Because we're coming from a previous downtrend. But logically, you can tell. Look at the size of the selling candlesticks. Big, big,
hmm,
and then they start to get smaller and smaller. That is a sign. The market
yes.
will give you
Losing
clues.
momentum. Losing momentum.
Loss of momentum. So now the buyers are going to come in.
Quickly.
I wouldn't buy at this level until I start seeing a big buyer or a bank. Why do I want to go with a bank, ladies and gentlemen? Another logical explanation behind that. Banks are known to defend their position. They wouldn't buy here with 10,000, let me say 1,000 lots, and let you and I take them out of the position. When the market comes back to their level, they normally put more orders and push the price further up. Welcome, Redrick Lamini. You have 7 minutes with us. So let me further explain this. So here,
Is she your cousin, that Lamini?
yeah.
That Lamini, is she your cousin?
No.
All right.
No, he's not. He's not.
Okay.
He's not at all. It's just that we're a big clan in the southern part of Africa. So yeah. For some people would look at this as a double top, right?
Yeah.
Double top neckline. So the reason I also sold is that we're back to retest that neckline. It's just that if you're focused on here low, you won't be able to tell that. I already entered here. I'm in some little bit of profit. I will not tamper with this trade. Where will I confirm that we are now really going down? It will be a break of the last higher low, which is here at 0.85 500. So once we break this level, 0.85 500, and then I can commit to more trades. So this is where we do pyramiding, not the scaling in that you see people taking 50 trades on the same pair. It is methodical.
Maxwell.
In what sense? The
Maxwell.
first, sorry, sir, can I just explain this and then I'll come back to it? I'll come back to you, I promise. So,
okay.
The first trade is here, ladies and gentlemen. This is a lesson of how to scale in or how to leverage on an original move and take more position. So the original position is here. It's a 1:7, right? And then say that the market goes according to this drawing of mine, breaks 0.85 500. What I'm going to do is I'm then going to move my stop loss from here to somewhere in the profit region, or let me say, put it at break even. What am I doing? I am eliminating risk of the first trade before I can take another risk on the second trade. Does that make sense? So never just go entering more trades. Always make sure that the previous trade risk has been eliminated before you can go into the second one. So at a break of 0.85, that is when I'm going to commit. I think we might have to have another 30-minute session after this because we have 4 minutes. Let me just go through USDs there, the dollar against the South African rand real quick.
I will forget what I wanted to ask you.
Go ahead, sir. Sorry, I had forgotten that you had a question. Yeah.
Yeah, I see you're very fast. We are too fast for us, man. We are old people.
Yeah.
Let's come to the chart again. No, I just want to see where are you drawing your line from? Your last lower low or your lower high here on this one, where you have decided that